It's Josh Houchins back again. This is section 2, raising capital for your deals. This is obviously a key factor, and this keeps a lot of people out of the business because they don't understand where to network and how to raise capital. I just want to first start off by saying that be wary of a lot of these larger institutions that do private lending that have become so trendy in the last couple of years. Obviously, they fund somebody. I don't really know who it is. I've never met anyone that's actually had one of these deals go through. I've seen on a couple real estate websites and people that chatted in there saying that they had gotten some deals done. But, you know, I personally have never met someone, in which I know a lot of people in the area that invest in real estate that have actually gotten funded by one of these larger institutions. They're obviously in business, so they're lending money to someone and getting a return on it. I don't know. I'm not involved with it. I've had a couple experiences with them. It seems like I always get the runaround. They want a lot of money up front. The key thing that you're going to get burned on is never pay money to any investor, whether you can actually go by my shake a hand method to someone or someone that you meet online or however you're going to find them. Never pay money unless it's on the HUD statement. At that point, the money's probably close to being in trust, if not already in trust or escrow with your attorney, and it's a done deal at that point. I always tell people, you know, when I first talk to a new person, that's fine, you know, if you want to charge me, I don't know, a trip fee, appraisal fee, points, you know, whatever they're going to charge you, doc fees, you know, whatever the case may be. I'm fine paying your fees, obviously if they're within reason, but you let them know, I'm fine with paying your fees, but I want them paid on the HUD statement. Are you fine with that? And if they say, yeah, that's no problem, then they're serious lender. They're going to actually lend the money, and then they're going to wait 2 or 3 weeks and get their money from the HUD statement. They're not going to just shake you down for a couple $1,000s on an application fee, and they want, you know, your second child's DNA and your wife's fingerprints and, you know, your dead grandparents' fingerprints. I mean, some of the stuff that these people want is ridiculous. I mean, you might as well just go to a bank and try to argue it out with them, you know, for 60 days to get the money. So I just try to advise everyone just to steer clear. I like to do deals with investors that I either know from past deals or how I met them to start with was by somebody I network with, and I actually could go up and shake their hand. They're a real person. I know them. They're going to tell you straightforward, yeah, hey, I'm going to do this deal with you, or no, I'm not going to do this deal with you. People always wonder, well, how do you know these people? Like, where did you find these people at? There's all kinds of RIA groups, which is Real Estate Investors Associations. They're all over the country. I mean, every city has one. You can just look it up on the internet, and some of them charge you $35 to, I don't know, $40 of, I think it's a quarter, I think it's $150, $200 a year, whatever the number is, it's well worth it. Basically go and you're going to network with these people because you're going to find out who's funding these deals. Most of these RIA groups have certain niches of people that do, you know, funding. Some of them do transactional funding, bridge loans. Some of them do rehab loans. Some of them are more into like long-term rental type loans with lower interest rates. It really all depends, you know, where you're trying to get in the market at. I do a lot of rehabs and flips, so I pay a higher interest rate. There's several ways that you meet these people. Like I said before, you want to have your team from section 1 already in place. You know, I have my realtor who's brought me a deal. It's a good deal. I've done market analysis on how much the house is going to cost me to rehab, how much I'm going to be able to sell that house for, and what I'm buying it at is an actual real life loan to value of what I'm asking for it. It meets their criteria. Obviously, if you're a little bit high on their criteria, you might have to come out of pocket for some money, which, you know, that just depends on the person. Me personally, I'd rather put some skin in the game, especially with the first couple of deals with somebody. They'll really appreciate it and feel a lot more comfortable doing business with you if you're willing to put some skin in the game. Because if a deal goes south and you got skin in the game, you don't have a lien on the property, and they're going to collect their property back and then resell it and accumulate their money back, hopefully with their interest or you know, some sort of margin on their end. At least get their principal back. Most disciplined hard money guys or investors, they're going to set themselves up for a very slim margin of failure on their end. But with that being said, you know, you want to approach these people with your team. You know, this is what I've got, this is who I have, here's my deal, this is how much it's going to cost, this is what I'm expecting to pay in points and interest, which might be a little bit less. I always try to come in just a little bit less than what they typically charge, just to kind of, you know, it's a good negotiating tool at some point. If you've got multiple people, you can put them all against each other, but that's probably going to come further on the road once you've proven yourself. To start with, you're going to probably end up having to take what you can get, as long as it's within reason. And then over the years, as you get a pretty good reputation of being able to turn them over, paying these people back, they'll usually come down a little bit because your risk is very low at that point. But basically, when you approach these investors, I try to tell everyone the key facts dealing with an investor is obviously knowing what you're talking about. 2, don't give them a 4-hour spiel about the house and, you know, you're putting, you know, mowing sink faucets in this bathroom and the tile is going to be laid in a basket weave pattern. They don't give a crap. I mean, period. No one cares. You need to be able to tell the investor, I'm buying the house for this much. I'm going to fix it for this much. I'm going to turn around and sell it for this much. Here's what I need. This is how soon I'm going to be able to pay you back. Here's my paperwork. Done deal. 3 minutes or less. If you can't say it in 3 minutes or less to the investor on your first go in front of them, you're probably not going to get it done. Most investors are doing other things. They don't have time to talk to you for 3 or 4 hours, even 30 minutes. Like, who cares? You know, why am I talking to this guy for 30 minutes that is telling me about a deal that I'm not even sure I'm going to do? 3 minutes or less, they're going to either write in and say, yes, no, I'm going to do it. After, you know, along the way before closing, you're probably going to have more interaction with them. Typically, they want to come out and see the property. They want to see your ideas. Always pre-walk the house. Start on a certain angle to walk around the house, which these are things we'll go over further along too. But there's a system to showing the property, just like a realtor when it shows a buyer the property. They're going to show them the wow factor, you know, either first or some of them do it last. It really just depends. Everyone's got their own type scenario of how they're going to, you know, set it up for the sale, and that's something you're going to have to adapt to. Me, I try to walk around and show them, you know, this is that, this is what I'm going to do, and here's the big picture. I kind of work it right at the beginning, but not the first thing we see. Kind of the wow factors, we like to call it, for the house. But pretty much, you know, raising capital is going to be tough for certain people. I'm not going to lie about it. It's a pretty, you either got it or you don't. Some people want to use an equity line or try to borrow money from the bank. That is your own personal decision. Me, I've been in the business long enough to know that if you take an equity line and your house fails, that's your personal house. If you have a wife and kids, you have other responsibilities. You don't want to personally guarantee anything because something could happen. The market could crash tomorrow, and you know, now you're stuck with a huge debt that you're probably not going to be able to pay back. If you had to walk away, you can walk away. And like I said to start with, it's, you know, don't get in a deal and don't put money up, you know, that you can't stomach to lose, because at some point you're probably going to have 1 or 2 that you're not going to make that much money on, or you might lose a little bit of money on. I've had lots and lots that I've made money on. I've had 1 or 2 that I hadn't really done so well on. But, you know, at the end of the day, you know, the law of averages usually works out, and you're going to be successful in a profitable way. So back to raising capital. This is, again, very essential. You're going to pay upwards of 12 to 15% on the money. So essentially you're having a partner, even though they're the lender, who's going to be in the first lien position. Most 90% of these guys aren't going to go in a second position or something crazy of that. You can raise capital from smaller investors and put them in a second position to raise money to pay off, you know, the first one to get the deal done. That's basically, if you don't understand what I'm saying, that's if the first investor wants you to put in $30,000 of your own money and they'll put up the rest. Well, what you can do is find another smaller investor that has 30 grand and give them a second mortgage on the property, and use their 30,000 to, you know, put towards the rehab or the down payment or whatever the structure of the deal is. So by connecting with different people and different size investors, so on and so forth, it is very critical to, you know, keep your capital that you need to put deals together at the access of a phone call. So basically, with what I'm getting at today is on your raising capital, it's all about networking with local people. It's something I strongly encourage people to do. Larger companies, I've never had any personal luck for them, so I wouldn't tell anybody something that I haven't already done. I might be wrong, they might be giving you a better interest rate. I've never had luck with them. It's cost me money. I learned my lesson one time. Ever since then, I'm done with them. So basically network, you know, who are people that are going to be invested in real estate? You know, go look at your tax records, you know, look at closings. I mean, a lot of the stuff in real estate transaction is public knowledge. You can go down to your courthouse and you can find out who's lending money on different properties, or drive around neighborhoods you like, you see a rehab going on, or you see a new home being built. Go look at it, you know, go look at who's got the lien on the property. I mean, it's an easy way to find people. And don't be afraid to go and approach them. You know, people will respect you more. You walk up to somebody you don't know and say, hey, I've got a deal. You know, I need $250,000 in 3 weeks, you know. People give you a little bit of respect, you know, when you do that. Obviously, if you're doing it in a professional manner and you know what you're talking about, there's probably somebody that's going to tell you no, you know. Just pick up your stuff and move on. I mean, there's somebody else out there who wants to pick up the deal. I have a very, very strong opinion about some people that say if the lenders won't lend on it, it's not a good deal. Yeah, that's true in some sense. If you got 5 lenders and all of them are saying the same thing, yeah, some of them don't understand the market. Understanding your market is key. Some of them just don't understand it. Where I deal in Raleigh, you know, people that invest in North Raleigh or you know, East Raleigh, or you know, in the surrounding counties, they don't understand that we can pay $200,000 or $300,000 for a house, tear it down, put a new one on top of it, and make money. I mean, it's like a foreign language to them, where they don't realize we can get $210, $215, $225 a square foot, whereas, you know, 10 miles down the road, they're getting $110 a square foot, thinking they're making a killing. It's all about knowing your area, doing your research, and if you can present this in a professional, efficient manner, and use my standard layout that I do, which is something that you will get. I'll upload the document as well too, that will basically show you exactly how the investor needs to see it. The investor's a numbers guy. The numbers work or the numbers don't work, period. There's no real gray area in that. They're going to lend to a certain value if you can justify that. And when I say justify that, you know, you want to do a CMA, a comprehensive market analysis on the property, what's sold, what hasn't sold, why you think you can get this. Typically what I always do on mine is I put a 97% of the list price. Most of my houses actually sell at list or above list, but if you go to 97% of what you think you can sell it for and use that as your value, people get it. You know, that's kind of how a bank would analyze the deal as well too. So that's going to give you a solid loan to value, give your investor the insurance they need that you're buying at the right price, provide them all the information they need on the first go around at 3 minutes or less. After that, you can provide them documents and other things that you've prepared to actually show them, you know, more detailed, which I'm sure they'll eventually want to see. But your first go around, remember, if you can't do it in 3 minutes or less, go home and practice it, and don't even waste your time, because you get one and done is how it's always is. You go an investor, you get your first impression with them, one and done. If it's not a good deal and they don't want to do it, that's not really a one and done. But when you walk up to your investor and you say, I need, you know, and then it doesn't pan out, it's one and done. So keep all this in mind, and we'll go on in depth this further. Of course, if you have any questions, always feel free to contact me. I'll be more than happy to answer any questions or help in any way I can. And stay tuned for the next section, and we'll move forward.